Good day Forex trader. Your USD Forex Signal, bears have prevailed. Since bears have prevailed, the path of the least resistance will be lower, with the next key support level being at 1.0800. Bearish view. Sell the EUR/USD pair and set a take profit at 1.0800. Add a stop loss at 1.1050. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 1.1000 and a take profit at 1.1100. Add a stop loss at 1.0900. The EUR/USD pair made a major bearish breakout in the overnight session as the Eurozone economic conditions worsened. The pair dropped to a low of 1.0900, which was the lowest level since March 14 this year. It has fallen by more than 2.4% from its highest point in March. Recession bells ringing? The Eurozone is in a tougher position than other countries because of the ongoing crisis in Ukraine. The bloc relies mostly on Russian energy and its businesses are more integrated to the region. For example, Germany buys about 40% of its energy from Russia while Austria buys 80%. At the same time, the bloc's automobile companies like Fiat Chrysler, Volkswagen, Renault, and BMW rely on key parts from Russia. Among the most important ones are the platinum group metals, PGMs, like platinum and palladium that are mostly used to manufacture catalytic converters. On Tuesday, it was revealed that the EU was considering adding more sanctions on Russia. These sanctions will suspend imports of important commodities like coal. They will also block Russian ships from European waters and transport firms from the region. While these measures are intended to punish Russia, the EU will not be spared either. For one, the countries will need to source commodities from other countries and at a higher price. At the same time, Russia will likely divert European-bound commodities to other countries and at a higher price. The EUR/USD pair also declined sharply after a hawkish statement by Lael Brainerd of the Fed. She joined other FOMC officials in warning that the Fed will embrace a more hawkish sentiment in the coming months. She said that the bank will likely deliver a 0.5% rate hike and start a quantitative tightening process. EUR/USD forecast. The EUR/USD has been forming a channel pattern in the past few weeks. And on Tuesday, the pair managed to move below this channel in a sign that bears have prevailed. It moved to the lower side of the Bollinger Bands and below the 25-day moving average. Also, the Relative Strength Index and the Stochastic Oscillator managed to move below the oversold level. Therefore, since bears have prevailed, the path of the least resistance will be lower, with the next key support level being at 1.0800. Gbp Usd Forex Signal, consolidating below $1.3181. A key pivotal point is likely at $1.3000. My Gbp Usd signal last Wednesday was not triggered as there was no bearish price action when the price first reached the resistance level which I had identified at $1.3163. Today's Gbp Usd signals. Risk 0.75%. Trades may only be entered between 8 a.m. and 5 p.m. London time today. Long trade idea. Go long following a bullish price action reversal on the H1 time frame immediately upon the next touch of $1.3000. Place the stop loss 1 pip below the local swing low. Move the stop loss to break even once the trade is 25 pips in profit. Remove 50% of the position as profit when the price reaches 25 pips in profit and leave the remainder of the position to ride. Short trade ideas. Go short following a bearish price action reversal on the H1 time frame immediately upon the next touch of $1.3163 or $1.3236. Place the stop loss 1 pip above the local swing high. Move the stop loss to break even once the trade is 25 pips in profit. Remove 50% of the position as profit when the price reaches 25 pips in profit and leave the remainder of the position to ride. The best method to identify a classic price action reversal is for an hourly candle to close, such as a pin bar, a doji, an outside or even just an engulfing candle with a higher close. You can exploit these levels or zones by watching the price action that occurs at the given levels. Gbp Usd Analysis. I wrote last Wednesday that the price was showing a choppy consolidation between $1.3050 and $1.3150. I had thought that if the price hit $1.3163 and made a bearish reversal, it would make an attractive short trade entry. I was correct about looking for opportunities on the short and not the long side, but I was wrong about the reliability of the resistance level I had identified at $1.3163, as it failed to hold the price and cap the high of the day. The correct level would have been $1.3181, which did act as effective resistance that day and has continued to do so since. We have seen the price continue to consolidate below $1.3181 over the past week, with more movement on the bearish side as the US dollar resumes its long-term bullish trend. The price has now arrived near the half number at $1.3050, which has been informally supportive, although it is not really a key level. This means that we may see a rise from here over the short term, but it is hard to tell. The big round number and support level below at $1.3000 really stands out as potentially providing a great trading opportunity by acting as a major pivotal point, either mid to long term from a bullish bounce at $1.3000 if the level holds, or from a short trade if the price can break and get established below $1.3000. This is because there are no support levels close by below $1.3000, so the price could have a lot of room to fall without meeting any supportive obstacles. Day traders may try to take some long pips from a bounce at $1.3050, but swing or position traders should only look to trade off $1.3000 or $1.3181, neither of which are likely to be reached today, so opportunities here are likely to be limited right now. Aud USD Forex Signal, climb to 0.7700 possible. The pair will likely resume the bullish trend ahead of the FOMC minutes. Bullish view. Buy the AUD USD pair and set a take profit at 0.7700. Add a stop loss at 0.7500. Timeline, 1 day. Bearish view. Set a sell stop at 0.7537 and a take profit at 0.7450. Add a stop loss at 0.7600. The AUD USD pair pulled back during the American and Australian sessions after the hawkish statements from the Fed and Australia. After rising to a multi-month high of 0.7655 on Tuesday, the pair declined to a low of 0.7570. Hawkish Fed and RBA. The Federal Reserve is set to get more aggressive, according to its incoming vice chair. In a statement on Tuesday, Lael Brainerd said that the bank will do whatever it took to contain inflation. In addition to rate hikes, the bank will likely announce that it will start to wind down its $9 trillion balance sheet. She expects that the Fed will make this decision in the upcoming meeting scheduled for May this year. Other Fed officials like Clarita and Mary Daly have hinted that the bank will deliver a 0.5% hike in May. This statement comes at a time when the bond market is sending warning signs about the economy. Last week, the yield curve inverted to its lowest level since 2007. Historically, inversion of the yield curve is usually a sign that the economy will go through a recession in the coming months. The Fed will publish its minutes later on Wednesday. On Tuesday, the AUD-USD pair jumped sharply after the Reserve Bank of Australia, RBA, made its interest rate decision. The bank decided to leave its interest rate unchanged at 0.1% as most analysts were expecting. The main reason why the pair jumped sharply initially was that the bank abandoned its language on patience on inflation. As a result, it left the door wide open that it will deliver its first interest rate hike in June this year. If this happens, it will be the first time that the RBA has hiked interest rates since November 2010. AUD-USD forecast. The 4-hour chart shows that the AUD-USD pair has been in a strong bullish trend in the past few days. This trend accelerated on Tuesday after the RBA interest rate decision. As it rose, the pair managed to move above the key resistance level at 0.7537, which was the highest point on March 28. It is still above the 50-day moving average while the stochastic oscillator has moved below the overbought level. The money flow index, MFI, is slightly below the overbought level. Therefore, the pair will likely resume the bullish trend ahead of the FOMC minutes. The next key level to watch will be at 0.7750.